Bitcoin has seen a little bit of a rally to the upside after hitting $55,600. The question on everyone's mind right now is this a start of a trend to the upside, or is this just that, a relief rally? In today's video, I'm going to be addressing my thoughts and opinions as to where I think the price action is heading on the 1 hour and 1 day timeframes for BTC. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, and let's take a look at what's going on with Bitcoin here. So here we have BTC paired up with USDT. We're on the 1 hour Binance chart here. And as you can kind of see, we got rejected on the 200 EMA here on the hourly chart. This happened on basically Tuesday at 0200 hours. We had a second retest here before completely getting rejected. We were hopeful in the last update video that I put out that we were going to find support on the 50 EMA. Unfortunately, we didn't. We lost not only the 50 EMA, but also the 50 SMA. And this was then followed down here with a basically crash in the market. A little bit of a relief rally before dropping. And so how I would have traded this one if I was actually around on Wednesday would have been to see this play out slightly more aggressively to the downside. There would have been a shorting opportunity right here, stop loss above the 50 EMA, and we would have targeted out 1.5, and we would have basically been able to take out some of the profit from the market quite easily. So a great little short opportunity was there. And then of course we wicked down and we saw this great move to the upside. Now again, here yesterday we saw this push to the upside. We have seen so far in the kind of late hours yesterday afternoon, about 1400 UTC, was a push to 58,519. Since then, Bitcoin's price has moved down another 2.78%. This is quite an interesting structure, though, that we need to address. Right, we have this interesting push to the upside that was a pretty decent run from the lows of 55,600 up to this area here was a 5.24%. Now, the move to the downside that we've seen so far in the last kind of few hours or so is quite interesting. It's interesting because we've already hit that 1.618 area. So this is a 5-wave move to the downside, whereas we don't see 5 waves going to the upside here. So this is actually quite a corrective bounce, so a relief rally, and we look for further slippage. Now, a 5-wave move like this, it can be a part of a couple of different things. We could be looking for irregular flats, running flats, those kind of stuff, or more in line with the idea that we are actually tracking zigzag-based patterns, which are 5-3-5. So 5 waves down, 3 waves up, 5 more waves down. So here, we need to understand how high are we likely to bounce to the upside and where our invalidations are going to be, what we look for breakouts, and how we can trade those. Okay, so typically a wave 4, which is where we would typically be finding ourselves right now, would be moving up between a kind of 38.2% and a little bit more towards the 50% area. So we can look here and say, actually, we're going to be kind of, up into this pocket here, in my opinion. So we want to be looking for, actually, so say 382, I meant 236. So we'll be looking in this little range, basically 57,241 to 57,635. But here's the thing that the bulls are going to be looking for. The bulls are going to be looking for a rally, a breakout above 57,646, this swing low. Okay, so if we draw this in for impulsive trend breakdowns like we are seeing here, wave 4 is not allowed to cross that wave 1. So we can't come up higher here without breaking this structure. So the bulls are going to be looking to target out that range of 57,646. As that's going to break the structure. If the bears get their way, we'll probably look for further slippage to the downside. Let's hypothetically say we go up to about 57.5K. Then we are going to be looking to target down this lower range here between 56,545 to the slightly higher range here of 56,758. That's going to be your 5th wave movement. Okay, so a few things to kind of be in mind. If we do complete the bearish pattern here and we have completed the relief rally to the upside, then we'll be looking for a 1, 2, kind of 3 here, 4, and then 5, like so. This will then be met by another relief rally where we'll see, a bit of a push back up to this previous area of resistance, of which, guys, we can mark in here for our reference, right in this little pocket, right in line with that wave 1 low, coming in with previous support that looks to turn to resistance at 57,589 to 57,672. Okay, so that'll be where we'll be looking for those resistances to be. That will then be met, of course, by an additional 5-wave wave move to the downside, where we look to retest these lower ranges. No guarantee of breaking that existing low at 55,606 at this stage, but of course this can turn into a more sinister impulsive breakdown as well. So be very mindful here. We could have actually traded beautifully here in and around these 50 EMAs, 50 SMAs, but I think the risks were quite high, so probably wouldn't have traded that. And as the market was gearing up for long positions, is what I was saying about 2 days or so ago, we saw the rejections here, and as soon as we lost these 50 EMAs, 50 SMAs, we could see that further slippage to the downside. I still see us with runs to the upside to occur, but they are not going to be anywhere near as powerful as maybe we hoped they would be, since coming down to $55,606. Okay, so on the hourly chart, it's very, very interesting. Now, if we bring up our smart money concepts, you can see here the fair value gap, where we almost filled that, coming down into our expected range between 56,537 and 56,755 is going to complete that fair value gap and fill it out. And there's a pocket of buying down here as well. So we are likely to get a bounce from this area. So the potential will be for, if the price does come down here and does break down as in line with Elliott Wave theory, then we look for a long position up to the previous area of resistance, which would be about a 3 risk reward ratio if you have a decent stop loss. I personally, as you guys know by now, only want target 1.5 because that's what I'm looking for. Nice, quick, easy trades, come in and out of the market and take, your profit. So it does look like there's a fair value gap up in the range of the wave 4, so we can fill that, come down, fill out the fair value gap on the large time frame, and then of course we were looking forward that next big move to the upside. So smart money concepts, Elliott Wave theory, kind of all aligning. Momentum has shifted down quite nicely, but still has plenty of room to fall, so expect more volatility here, but a relief rally does look like it's in the pipeline even further to the upside in due course. I'm kind of been talking about this for a while now. Our expectations are that liquidity is being extracted from the market. So expect more of that. Expect to see continuation of pumps and dumps and liquidity being pulled from the market, because that's essentially what I'm seeing happening here in terms of the price action. Okay, so more of that, I think, on the smaller time frames. Let's roll this up into a daily, because we have been talking about the idea of moving down a little ways here. No closed positions as we kind of come down here, which is a positive. We were hoping to hold this area of 56,714. It obviously hasn't, and well, we can see here that we still find ourselves in on some unfortunate areas on BTC's price action. So as we fell down, this is still a 5-wave, or it has the appearance of a 5-wave breakdown. The rejection on the 200 EMA was a huge opportunity as well. As you can kind of see, we lost it, we tested it, we tested it, we tested it. This would have been a great area for a short right here. This would have been on Saturday the 31st of August. We would have put the stop loss higher than the previous swing high, and we would target out 1.5 on the risk reward ratio, as I probably would have spoken about before, and we would have already completed this trade out quite nicely. So again, loads of profit to be made depending on your trading styles. You know how I like to trade breakouts and breakdowns by now, and that is essentially what we are seeing here inside the charts. Loads of opportunities. Now on the daily time frame, of course, we still have that ability to pull down, and as I have been talking about for quite some time, $40,000 to $44,000. Okay, it's $40,295 to $43,800. Okay, that's the target range that we've been looking at for what feels like many weeks at this stage, and we're just progressing nicely towards that targeted range. What's going to be that catalyst? Well, I do believe that's going to be the Federal Reserve pivot, but maybe I'll talk more about that in another video. But ultimately, yeah, we are still heading down towards those targeted ranges. That hasn't changed. It's pretty much business as usual here for BTC. On our stochastic RSI, still showing, we were hoping to see some momentum shifting as we saw the cross. It didn't really last very long, and we now have another negative cross on the stochastic RSI and the average of the stochastic RSI. So it still shows us with more bearish movements in price. The relative strength index is also indicating more slippage to the downside. It doesn't look like that's likely to stop. So in line with our expectations around kind of those $40,000 to $44,000 level, hasn't really changed. And of course, this is still incredibly bullish because of the price action analysis here. So if you don't care about, indicators, Elliott Wave theory, all that kind of stuff, and you just want the candlesticks, this a very much overlapping price action shows that liquidity is being extracted, and I expect one large last push to grab liquidity before we actually rally up into fantastic all-time highs. I know a lot of people are very, very fearful, so do watch out for a video that I intend to put out talking about historical patterns in terms of Bitcoin's price action and where Federal Reserve interest rates, US elections, all that kind of stuff kind of plays a pivotal role in what is going to happen in 2025. It's looking very, very positive in my opinion, not as negative and not as bearish as other people maybe are trying to make out, trying to kind of create fear and FUD and basically just shake people out of the market, because that's what I think the market is going on at the moment, extracting liquidity, shaking people out and all that kind of stuff. But 2025 is going to be a fantastic year in my humble opinion. What's your thoughts on all of this? Let me know in the comments below or join us in our free Discord server. And if you haven't done so yet, guys, check out my second channel right here where I go through the Cardano technical analysis every single day.